Hello, everyone, and welcome. We are here today to discuss credit consulting basics for small business owners. I'm glad that you're here today. My name is Darlene Rose Schultz. I'm a managing consultant for SBC Bookkeeping and Consulting, and I'm here working on behalf of Community Ventures to share this information with you. I know that credit can be a little overwhelming in any way, whether it be for business purposes or personal. So I'm hoping that at the end of this webinar, you feel a little more confident about the topic. So with that said, we're going to go ahead and get started. So at the end of our workshop today, it is my hope that you have a better understanding of the difference between personal and business credit, that you know where to access your credit report and how to read it, or what different parts are involved with your credit report. That you can go through those reports and identify if there's any discrepancies or anything that needs to be disputed. And if there's not, what you can do beyond that to help with credit. Understand actions that you can take for that credit improvement, like I mentioned, and then have a better understanding of how lenders evaluate your credit, your financial strength as a business owner, and then create a realistic and personalized credit action plan moving forward after you've determined what's on your report to know what you can do to improve it. So, why does credit matter for small business owners? Well, we all think of credit as it relates to getting a loan, getting funding for our business, which is a very important aspect of it. There's no question. But our credit, both personal and business credit, can impact more than just SBA loan approvals or bank loans and lines of credit and eligibility for microloans. It also impacts interest rates and borrowing costs. So the amount of money that you spend over the life of the loan can be impacted by your credit. Business insurance premiums can be affected by credit. Your vendor payment terms, and of course, if you're leasing property for your commercial for your business, whether it be brick and mortar or a warehouse or whatever the case may be, your credit can impact those decisions as well. So one thing to consider, just kind of as an example, a person who might have a 580 credit score may very likely spend a much more money as it relates to interest and fees and things when they're setting up their loan over the life of the loan than somebody maybe with a 720 score. So it truly does impact a lot of different aspects, and it's important to know how to fix that or how to improve your best, create a situation to give yourself the best chance to have not only credit offered to you or loans offered to you, but also to not have to spend as much of the life of the loan. So good credit can improve access to capital and reduce borrowing costs overall. So as mentioned at the beginning, there's two kinds of credit that we're going to consider today. One is your personal credit. So that's the credit that's linked to your social security number. It's what's used by lenders when evaluating small business owners. It's part of the big picture. And it reflects your personal borrowing and repayment history. So your mortgage, your car payments, your credit cards, etc., personal loans are all tied to your personal being. That is your personal credit. Business credit is linked to your EIN or business identity, separate from your personal. It tracks business payment history. And as a part of this presentation, we always like to stress it's important to make sure, if you haven't already, depending on where you are in the small business process, that you separate your personal monies, your personal finances from your business finances. So if you're just at the beginning and you're getting ready to make this business dream happen, make that as part of your top several actions when you're creating that. You're going to have a personal bank account, you're going to have a business bank account, make sure everything's separated. Both small lenders tend to look at both your personal and business credit, which is why we're talking about both today. So how do we find out? Let's start with personal credit. How do we find out what's on our report? If you have not already looked at your own credit report, one way you can access it is through annualcreditreports.com. Though it says annual, you can actually access it more often than that if you choose to. This particular service does report from all three bureaus, the Equifax, Experian, and TransUnion. So they'll all be there in the same report, and you can compare and contrast what you're seeing between bureaus. The reason that's important is some creditors don't report to all bureaus. Some do. It just depends. So you might find differences as you look between the three different reports. It's also important to look at all three reports because there might be an inaccuracy on one that's not on the other. So if you have all three in front of you, you can really get a full picture of your credit information. Two things to think about when we're talking about our credit report versus score. That is two different things. So your credit report is that detailed information about your borrowing and repayment history and activity. It shows all the different things that you have outstanding currently and what you've had in the past. Your credit score is a number that's associated with all that information, which we're going to talk about here in a minute, how they break that down. So when you're thinking of credit report versus credit score, think of your credit report as your overall financial report card. Your credit score is just kind of the grade that goes with that report card. Credit scores range from 300 to 850, with 850 being your stellar number. The two different kinds of scores that you might see, your FICO, which you see used by lenders most often, and your VantageScore that's used by some banks and credit monitoring services. Your credit score is made up of 5 different pieces, with the top 2 being your payment history and your credit utilization. Payment history comes in at 35% of your score, credit utilization about 30%. And then the final 3, making up 10 or 15%, are going to be your length of credit history, your credit mix, and your new credit inquiries. So payment history is exactly what it sounds like. I have this many credit cards out, and I can see on my report that I've consistently paid everything on time as prescribed. That's going to be your payment history. That's the biggest piece of the puzzle. Credit utilization, which we're going to talk about on the next slide, is how much of your available credit you're using. That represents 30%. And then length of credit history is quite literally what it says, how long you've had credit. Credit mix is the different types of credit you have on your report. So you may have loans and credit cards, things of that nature. So the mix of all the different kinds of credit. And then new credit inquiries, we hear about soft pulls and hard pulls. The hard pulls, the ones where you're having creditors actually pull your report and look at it, that's where the new credit inquiries come in. As promised, we were going to talk about credit utilization. So this is such an important part of your full credit report and score that I do want to kind of just hone in on it for a minute. Your credit utilization is the percent of available credit you're using. So if you, for instance, have a credit card that has a limit of $10,000 on it, and your balance currently is $3,000, your utilization in that case is 30%. You're using 30% of the $10,000 credit that you're allotted. If you have a $1,000 balance, then that would be 10%. The reason this matters is the lower the utilization, the better, with 30% or under being the goal, and under even better, right? But you're having a lower utilization signals a responsible credit management and often will positively influence your credit scores and relatively quickly. So as we go further in this presentation will show that getting that utilization score down, you often will see the biggest boost in credit scores through that action. So a few common credit myths that people hear that I kind of want to squash. The first one is checking your own credit score can lower your score. That is, in fact, not true. When you're looking at your own score through credit monitoring systems, through your credit cards have monitoring systems, and some bank cards or banks accounts do as well. When you're looking at it yourself, that's a soft look. It's not going to affect your score in any way. So don't be fearful of staying on top of what your credit is. It's important to know that, and it's not going to affect you in a negative way. Another myth, closing old credit cards always helps. So you pay that credit card off, and you think, okay, I'm going to close it. And that will help me in the long run. The paying off is going to help. That zero utilization is wonderful. Zero balance is great. But by closing that account, what you're doing is you're lowering your credit history, which, as you can remember from the couple slides ago, is a part of your overall score. So if you're able to pay that credit card off, leave it open. Don't be tempted to use it. I think back in the day we used to tease, or maybe we didn't tease, some of us did, put our credit cards in ice packs and put it in the freezer so we couldn't easily use it. I guess that's not working as well now that we can do everything digitally, but leaving it open is actually ultimately a good thing, to include that, or to increase your credit history. Another myth is when you pay off a collection, it automatically comes off of the credit report. Unfortunately, that is not always true. As you're paying things off, if you do have collections, stay in close contact with the creditor, ask them for relief, see if they can remove it for you, or add a note to specify that it's been paid off, or whatever the case may be. So I think you're going to find a common theme through this entire presentation is communication is so important. Communicate with the creditors that you're working with so that they can help you to see positive movement on your credit score as you do positive actions towards improving it. So reading a credit report. If you have not had the opportunity to look at your credit report yet, I will hope you're going to do that after we talk about all these different components on your presentation, this presentation. But there are, just to kind of break down a credit report, there are different sections of each report that you will come to. So the first is going to be your personal identifying information. When you have those reports in front of you, look at that. Scrutinize it. Make sure it's correct. Make sure your name is spelled correct. Your social security number is correct. Your address is appropriate. There's contact information that you can be found at that is correct. So that's the first block that you want to take a look at. Beyond that is going to be your account history. So each section below your personal identifying information is going to break into blocks the different credit that you hold. If you have a credit card in the first block and a car loan in the second block, whatever the case may be, each of those sections is going to show your payment activity. So it looks like a kind of a graph or a chart that has the different months and different years, and it will show your green check mark that when you paid on time and paid when asked to, or if there's a red X, that often means that you didn't make that payment or you were late. So you can kind of see a visual of the payment activity. It also will show credit limits and balances, especially with credit cards. So you'll be able to figure out that utilization there. Oftentimes it'll even tell you what your utilization is on there. You'll also be able to see collections or charge-offs. If you have any of those, you can look and see, and the creditor information will be in that block. So that's a way to reach out to them, see what you can do to make that better. And lastly, public records are also on there. Public records would be if you have a bankruptcy, that would be listed there. That's really the main one. So it might not even be applicable, and so you wouldn't see it at all. Just to define what a charge-off is when a creditor classifies a debt as a debt as a loss. So you haven't paid for a long time. They've decided that they are not going to receive that money, and they charge it off. That is obviously a very negative thing on the credit report. So again, I encourage you to, if you see those, to reach out to that creditor and find out the circumstances and see if there's anything that you can do to fix that moving forward. I also encourage my clients, as we're starting this credit history journey, gathering this information about yourself, to create some kind of a tracking system to keep you on, to know what you've done with what creditor on the report. So for instance, a notebook, that is the easiest way to do it, right? You can just have a notebook that's specifically for your credit tracking, and you keep track. I looked at my credit report on this day. These are the things that I found. I have this creditor that I want to reach out to, and I did on this day, and this is what I found out, etc. So just keeping good notes of what you're doing and what you're trying to accomplish per block. And then, on the next page is the next time I look and the next information. So you always have the notes in front of you when you're talking to people and you're organized. Another way would be a spreadsheet. If you're more comfortable doing that, that's an awesome option. And I'm quite certain there are probably apps out there and things like that that you can find for this purpose too. But really, it's okay to keep it simple. Just a notebook and writing it down or a spreadsheet works perfectly. So when you're tracking this information, make sure you make note of the account name, what you found, if there was something inaccurate, what that was about. We're going to talk about disputes here in a minute. The date that you are currently looking at it, what action you're planning on taking, if you contacted a credit bureau, which one, or did you all do all three, and what the current status as of that moment is, and then maybe even what your goal would be for that as well. Okay, so talking about disputes. So you're on your reports, you're from the different bureaus, and you're going through and everything looks right, and then all of a sudden something pops up that is not recognizable. There's some kind of a credit block on there that you don't ever remember being a part of. The name is not spelled right. It's somebody else's name, et cetera, et cetera. Anything that doesn't is absolutely incorrect. Make a note of that. Gather documentation that will prove that this is not you. And then you can actually submit disputes for that particular inaccuracy on the credit reporting systems that you're using. So when you go to annualcredit.com to get your report, annualcreditreport.com, you'll be able to actually on the computer that you're using hit a dispute button next to that particular action or that particular section and dispute it. Important to do if you are in the situation that is an inaccuracy. It's an important thing to dispute. Make sure you have documentation. Make sure you upload documentation that's requested. So you want to kind of gather all the things that you might think you'll need before you do the dispute. Make sure that you track when you did it and what actions you did and what actions you're hoping for. And then make sure you monitor responses. It is not a fast process. So we suggest maybe every 30 days, take a look at it, check back in. Once you've done the written, you're always able to, just reach out by phone, talk to someone there. Say, did you receive my dispute? What actions are being taken? Just keep really good notes as you go along until you see a result to that. So a dispute is actually a formal request to review and correct any inaccurate or incomplete information on your credit report. Only do a dispute if you know for a fact it is false information. If the information you have on there is negative, but it's true, we have some other things we can talk about. But only if it's inaccurate and it's absolute false information, you want to file a true dispute. So moving on to, well, what if it is true, but it is negative, but there are extenuating circumstances? So there's two kinds of adjustments that you can request in this case. One would be a goodwill adjustment. I see that I have some late payments. I remember at this period of time, I was out of work, for instance. Since then, I have become employed again. Things are better. I'm paying everything on time. I'm showing that I'm doing things the correct way or the way that's prescribed. And I want to ask for help on those X's from the period of time that I wasn't working, for instance. So again, you would collect the documents to show that, and you can request a goodwill adjustment. You are truly throwing yourself on the mercy of the creditor for this. There's no guarantee that help is going to happen, but it does. So it's worth the effort to see what you can do to have that corrected or changed or altered on your credit report. You are acknowledging the responsibility that I didn't have money. I wasn't working. Life lifed, as they say, and I wasn't able to do it. You're acknowledging that responsibility. You're explaining the circumstances around that time, and you're requesting for a reconsideration. That is a goodwill adjustment. Kind of the same, but a little different is a medical hardship strategy, a request for adjustment. Same idea, except this would be, I was out because I was ill and I wasn't able to pay my bills. I was out because I had a surgery or something medical to that effect. Again, the same kind of idea. You collect your documentation, you request an adjustment. For both goodwill and medical hardship, you can go and find that particular creditor, get their information online and reach out to them. Some creditors actually have specific email addresses for these requests for hardship strategies. or in adjustments, they have specific phone numbers that you can call for that purpose. They have specific mailing addresses. So you can find that usually online. I always suggest make sure it's in writing first. And then, of course, you can follow up talking with someone, but you want all of this information in writing as you go along. So do expect that they'll probably ask for documentation as it relates to your medical history for that particular time, and why you had a reduced income at that time. So they will ask for documentation likely as you're going through that process. So just to kind of recap this, a standard dispute versus a goodwill or medical dispute. A standard dispute is the information is not correct. It is false, and I need it to be corrected. A goodwill or medical hardship request is the information is correct, but I had extenuating circumstances, and I hope that you will consider those extenuating circumstances and help me to improve my credit based on what I'm doing now and my improved payment history, etc. So we've looked at our credit report. We found if there's any inaccuracies. We found if there's any negative things that we can just say, I had extenuating circumstances. Can you help me? And now there might be some negative things, and there just aren't. It's not disputable. There are no extenuating circumstances. It's just, it happened. Had some late payments, whatever the case may be. So I can't dispute them. I can't ask for adjustments. What do I do now? Well, now we need to focus on how we can improve the credit through our actions, personal actions, right? So we can start by focusing on improving our payment consistency. Make sure you're paying every month before the due date or on the due date consistently. So you're going to start seeing all those green check marks instead of any red X's. Lower any of your outstanding balances that you're able to do, thinking about your credit utilization. Keep that in your mind. Limit new credit applications. So those hard inquiries we want to avoid while we're trying to improve our credit. So try not to ask for a loan. Try not to apply for new credit cards. Have a period of time. I'm not going to be doing that because we want to keep that new hits at as low as possible, or 0% would be the best. And then, come up with some structured debt repayment strategies. We're going to talk about those in a moment, of ways to start getting those payments paid and those balances down. So without further ado, here are those possible debt strategies. So the first one is going to be the debt snowball method. Both strategies I'm going to talk about, you start by doing this. You look at your credit reports and you list out, say, all your credit cards, how much you owe, what the full amount that you can, what you're allotted, what your percentage is, and your interest rate. That would be a great start to make those lists. Then and your minimum payment. So you determine how much you're going to pay in minimum payments for all of the credit cards that you have on there. What is that number? And then determine how much more a month you can throw at your credit cards to get the balances down. So over and above the minimum. So for the snowball method, after you've done that, you will then you'll rank them in lowest balance to highest balance. You will pay all of your minimums, and then the lowest balance card will get what you have extra to throw at your credit payments that month until your lowest amount card is at 0. Then you move to the next one and go down the line until they're all where you need them to be, preferably at 0 if possible. This method works best for individuals who are motivated by seeing accounts paid off quickly. So you are just getting those numbers down to 0, and that the goal is to get those down to a very minimal amount or 0 as you go through, starting with the lowest balance, going to the highest balance. The other debt strategy would be the debt avalanche method. Again, starting the same way we talked about, listing those out. The only difference being, instead of doing them lowest balance to highest balance, you're going to do highest interest rate that you owe on that particular card to lower interest rate. So now you'll do the same thing. You're going to do all minimum payments each month, and then the one with the highest interest rate, you're going to throw the extra money at to get that down to 0, and then move down your list as you go. This method is great for individuals who are really trying to minimize their interest costs. So if that is something that you or want to focus on, this is the way to do it. So your snowball, you're starting to get your balances to zero quicker, and your interest or your avalanche, you're getting your highest interest rates cards paid off quicker. Those are the two that we suggest as you're working through getting your credits balances down. If you do come across collections or charge-offs, back to what we said, communication, communication, communication. So make a list of those. Don't feel like you have to attack all of them all at once. Just maybe pick one that you're going to take care of. You're going to call that creditor, find out what the collection amount is, what you can do to resolve it, work with them, let them work with you, so you can start seeing those come off of your report. Always obtain written confirmation of any agreement that you make with them before you submit the payment, though, and keep those notes. Also, you have the opportunity to set up credit monitoring, which is a great tool. There's places like Credit Karma, which I think we've all heard of, but also through your bank accounts, through your different credit cards. Oftentimes they offer a way to monitor your credit. So pulling your report's great. And I want to see you do that for sure. But if you can also have monitoring set up so that if something changes, you'll get a notification. Your credit score went up. Yay, you get a notification. Your utilization's going down. Great, you get a notification. Or something's been added to your report. Good thing to know. If you didn't do it, you want to make sure you address that. So monitoring is an extremely important aspect of improving credit. Oh, you also can detect possible fraud, which is also important. And then setting up technology and automation. I don't know why I'm having such a hard time with automation, that word. But basically, that is allowing you to give yourself some time to do this particular important part of your credit improvement for your business and just for personal both. So basically what this is you say to yourself, I'm going to make calendar invites for myself that says on this day each month, I'm setting aside however much time I need to look at my credit. That means you don't have to worry about all the other days of the month because you have something on your calendar. You're going to address those things then. Months get away from us. So if we have something, an automated calendar reminder on our calendar, we know that we're going to look at this on those days. The other thing for calendar reminders would be payment reminders. That I use all the time. It's very helpful. I have so many things going on all the time. It is great to have my calendar say, make sure you pay X, Y, and Z on this day. Then I just know it's going to be there, and it's something else I don't have to think about because I know I'm going to be reminded. Yeah, so remember through this process, by setting these appointments up with yourself, with setting these payment reminders up, etc., that consistency often drives long-term results. So being consistent, making those payments every month, checking your report or checking your score every month, or whatever, however you set up your automations for calendar reminders, etc. Consistency, consistency, consistency. There are some credit rebuilding tools that are worth noting. Two of them are the same but different. There's either secured credit cards or credit building loans. Basically, the way those work is you make a deposit or fundable deposit, let's say $500, to a secured credit card, and then you use that credit card like you would any other card. You use it to pay for groceries or gas or whatever the case may be. And you are basically pulling from your money that you invested in yourself. And then you pay those bills every month, just like you would any other credit card. So you spent $100 in gas this month. At the end of the month, pay the $100 back. And those cards or loans will report to the credit bureau for you. So that's going to continue to show payment consistency, utilization down, whatever the cases may be, and that's going to improve your credit score. So that's one option. There's another option out there called Experian Boost. It is a product, and there may be other products just like it. This Experian Boost is available in many, many states for many, many creditors. So basically what this is those payments that we make every month to live, our phone bill, our utility bills, things of this nature that are not automatically reported to the bureaus, and typically they aren't. You can get on Experian Boost, find which ones you pay every month. T-Mobile, for instance, might be an example. I pay T-Mobile every month. I know they're not reporting, but you can list that. And then Experian Boost, as you're making payments the way you do every month to keep the phone on, they're going to report to your credit bureau. So that too can help increase um, your credit score. There are some services out there. If you are a renter, same idea. You could ask your landlord if they are affiliated with something that will report that. You're paying that every month. How great it would be to allow that to help improve your credit score. So we're doing all this work. We're talking about how consistency is the key, and also patience is the key. So just to give you a little guideline, this isn't a perfect guideline, but it gives an idea of when to expect changes on your credit report as you're working through these things. So correction of reporting errors or reducing balances, you often will see changes in your scores between 30 and 45 days. Consistent on-time payments and lowering your utilization, usually you'll start to see some move in numbers in 2 to 3 months. And then just establishing those positive patterns, improving your credit mix in 6 to 12 months. Also, something to note, different kinds of credit and loans report to the bureaus at different times, maybe different times of the month, maybe not every month. So that's also something you can see on your report usually, and definitely through credit monitoring systems. They can give you an idea of when the next report is going to go for that particular credit card. So you might be paying consistently and doing all the right things, but you're not seeing any movement. That credit card might not be reporting every month. So you may find that it's going to report on this date, and then you start seeing bumps up in your credit score. So I guess what I'm saying is don't get discouraged. Keep doing the right thing. Keep staying consistent. You will see changes. It's not what you're doing or not doing. It's just the way the system works, depending on how they report, how the different creditors report. So, but you can usually see that on credit monitoring systems too, so you can get an idea of when they're going to report, and then you'll have a better idea of when that should impact the number. And don't forget, you're doing all this work and you deserve to celebrate that progress. So take a minute to pat yourself on the back and be proud of yourself when your score improves, when you're seeing some resolution to reporting errors. That's a huge one. When you're reducing balances and you're settling accounts. These are all very important steps towards your credit improvement, and then ultimately hopefully getting that funding that you're looking for. So take time to give yourself grace and be proud of that. You're doing the work. All right, so that was like a lot of information about personal credit. Let's talk a little bit about how business credit works. So again, business credit is separate from your personal. Your personal is associated with your social security number, your personal credit, your personal loans, etc. Business credit is associated with the business. Still you, because you're the owner, but the business. So to establish business credit, there's a few things you can do. Some of which if you're already in business, you've probably already done. So establish a professional business presence. Show a business address, phone number, website, email. Make it your business is legitimate. Make sure it looks legitimate to any possible funders. Make sure you have registered and have an EIN. Again, if you're already in business, you've probably already done that. You do that on the IRS website. Just a little side note that I always try to share with my clients. If you are being asked to pay to set up your EIN, then you are probably on the wrong website. To set up your EIN, it is free through the IRS website. So if you're on some place that's asking you to pay, they're probably going to take your money and then go get it for free. So never pay for an EIN. Just a little side note. Definitely have a business bank account set up. That shows, again, your legitimacy as a business. Go ahead and look to get a business credit card when you're ready to do that. Remember, they're going to be looking at your personal credit, and that is going to have a hard pull. So make sure that you're in the right space to do that before you do that. And creating a DUNS number is also a way to establish business credit. You can do that on Duns & Bradstreet, and it's a unique identifier used to track business credit activity. So kind of think of it as the credit report sort of for the business side. So the roadmap to establishing credit, legal business entity, your EIN, getting a bank number or a business bank account, getting your DUNS number. Establishing vendor trade lines is a way. So if you work, if your business requires you to work with vendors to get products or raw materials or whatever the case may be, see if that particular vendor is willing to kind of do a vendor line. And then if they report to the bureaus, some vendors do, not all, but some. So it's worth having that conversation and finding out if this, again, you're making the payments every month, if that can help build your credit even better. Again, you can do a business credit card when you're ready. And then, of course, monitor your business credit reports just the same as you would your personal. Take a look at those when you have the opportunity, when your calendar invite tells you to do so. Ways to strengthen your business credit. You can register with reporting agencies. Again, Duns & Bradstreet's an option for that. Experian Business, Equifax Business, all options for those. Open those reporting vendor accounts. Make sure then you're paying the vendors on time so they're reporting what you want them to report. And continue to monitor those credit reports as mentioned. Again, I think I mentioned before, not all vendors report, but some do. So having that conversation ahead of time when you're making setting up these credit lines is a good idea. At the time that this presentation was made, not that long ago, these particular groups did report payment history. These are for like office supply places. So Uline, Granger, Quill, Summa Office Supplies, they are examples of vendors that do report. But it's also important to note that reporting vendors, that changes. They don't, sometimes they report for a long time and then they stop reporting. So just have those conversations periodically and see how you can help yourself, have them help you. Okay, so how you're evaluated for funding. So recently there's been a slight change, not huge changes. I mean, this has been the way for a long time, but it used to be the credit score was like the end all be all. That number determined if you were going to be in the pile to continue to look at for funding or not. Now it's still very, very, very important. Please do not misunderstand me. But there, other things are being looked at when evaluating for funding. So we're looking at personal credit as mentioned, business credit if it's established, but also cash flow. Is your business going to be able to bring in the money consistently to pay the bill? They're looking at your banking activity, financial statements. Financial statements, if you're currently in business, is going to look like your profit and loss, your balance statements, your cash flow statements. If you are just starting up and you're looking for something like that, your projections, your financial projections that are part of a strong business plan, that's going to be looked at as well. What your experience is in the industry and your management experience is important to show what kind of a business owner you are and what expertise you bring in. Your capacity to pay the debt back, time in business. All of these things are going to be looked at when you're being evaluated for funding. So a strong credit score is always important, but we're looking at they're looking at overall financial strength of the business. So the credit number is opening the doors, but your cash flow and your ability to repay, et cetera, is what's going to secure the credit that you need for your business. So SBA lending is done through banks. It's done through credit unions, alternative lenders, CDFIs, things of that nature. So there are certain criteria and rules for SBA lending, but then each of these different entities might have additional things that they look for and look at. So always encourage my clients before they start the funding process to do some vetting, to have some conversations with maybe the bank that you do your banking, your business banking through. That'd be a good place to start. But then look at other places in the community too, maybe credit unions or CDFIs or whatever the case may be, to ask some questions so that you better understand what that particular lender is looking for. These are just general guidelines. And they're not necessarily set in stone, but typically major banks are going to be relying heavily on the credit reports, financial statements. Credit unions might have a greater emphasis on relationships and repayment capacity. Alternative lenders are going to be looking at cash flow, business activity, and business credit. Again, They're all looking at all these things. It's just what the different focuses might be. Have those conversations, understand what you're getting into, understand what you want to make sure is in place and solid before you start the loan application process. Some credit improvement red flags. If you are out there looking for help, which is okay, if you want some debt repayment help, assistance, places, organizations that help with these things, do be wary of places that say credit repair is guaranteed. There's going to be instant score increases because we already talked about nothing is instant. It takes some time. And paying upfront fees without written agreements. That's true with organizations that might help with repayment, but it's also true when you're working with creditors. Make sure you get everything in writing. It just protects you and it protects them. I guess if an offer sounds too good to be true, it probably is. So follow that gut feeling that you're having and make sure that you're doing all the research that you need to before you enter into any kind of an agreement. Best practices, we've talked about never dispute accurate information. If the information is accurate, it's not a dispute. It might be something else, but it does not fall under dispute. Always avoid excessive credit applications. Don't fall into the trap of applying for every credit card that people are asking you to apply for. You're at the store and they're asking you to do a grocery store credit card. Say no to those things because you don't want those hard inquiries hitting your credit report and then ultimately affecting your score. Avoid late payments whenever ever possible. Try to make a budget and stick to it. Make sure you're paying at least the minimum balance by the date that it's due. Obviously, the goal is to increase those minimum payments. But using whichever method you decide, maybe the snowball or the avalanche, the minimum payments come into play, except for the extra money you're spending towards getting the balances down. And definitely stay in contact with your creditors. That can be an uncomfortable conversation, and I know that. Personally, I know that. But communication is so important. And having these relationships with these creditors to help them help you, make sure you're doing that. Some resources, annualcreditreport.com, like we talked about. There are other ways to get your credit report, though. So if there's another option out there that you want to use, go ahead. This just happens to be one that we mentioned because it has the 3 credit bureaus on it. SBA.gov has some good information about business credit. Dun & Bradstreet, which we've mentioned, good information, and also where you can get your DUNS number. And the consumerfinance.gov is another great resource for information regarding credit. So what can we do at this point? Well, we can look at a 90-day option. Just to kind of give you a skeleton idea, you can fill in what spots you want to focus on. But for instance, month 1, I'm going to get my reports. I'm going to review the reports and identify any inaccuracies. That's one thing I'm doing this month on my day on my calendar. And then that's what I'm going to do. And we'll look at next month. So next month, then I'm going to try to reduce my utilization. I'm going to address some outstanding issues, maybe what I found in the inaccuracies the month before. Month 3, I'm going to start building on my positive payment history, make sure I'm paying things on time. I'm going to start monitoring my progress. And then I'm going to set what my goal is going to be. I'm going to create sustainable credit improvement habits, remembering that progress is often measured in months and not days as it relates to this. So that's one 90-day plan you can set up. If you want to think about what can I do in the next 7 days, you want to start this right now, pull your reports, set up a monitoring of some kind, find your potential inaccuracies, and decide I'm going to contact one creditor if I need to, and focus on one balance to reduce. Baby steps. Baby steps is good. Small actions taken consistently over time produces meaningful results over time. So remember, 10 months from now, 10 months is going to pass. In that 10 months time, maybe you can do these things and you can start to see an improvement in that 10-month time. So that is the end of the presentation. I want to thank you all for joining. If you have any questions, you can ask them in the question and answer section, and we can try to answer those before we leave. You also have the opportunity, of course, to reach out to Community Ventures for more information. I have some contact information on the screen right there for help with that. I appreciate all of you being here today. Like I said, if you have any questions, I'm going to stick around and answer those as I'm able. But it was great to have all of you, and thank you. All right, so doesn't look like there's any questions, so we'll go ahead and end now. Give you a few minutes back on your day. Hope you all have a wonderful day, and thank you again for joining. And do reach out to Community Ventures if you have any questions. Oh, wait a minute. I have a hello. Yes. Okay. Okay, you're typing. I'm watching. So there's a question regarding improving credit and getting business funding after filing bankruptcy. Improving credit is always a possibility. You always have the opportunity to use the strategies that I mentioned. It might take a little bit longer after bankruptcy, but nothing is impossible. So make a plan for yourself and stick to that plan, continue the monitoring, and you will have the opportunity to see some improvement. And certainly, funding of any kind after that improvement happens is always a possibility. So I guess don't lose faith. So the question is, as a startup owner, what are the chances of getting funding? Again, it's going to be very dependent on all of those aspects that we showed that have to do with your personal credit, business credit that might not be established yet, um, a strong business plan, financial projections, and the lender that you're working with. So it's probably important to um, get those relationships started with different possible lenders. That's what my suggestion would be, Natalia. Um, it, I don't want to say by any stretch that startup funding is not available and doesn't happen, because it does. It is very possible. So just kind of follow the strategies and make relationships. That would be my best advice for startup funding. I hope that's helpful. Um, Debt relief services have their place. My If you're able to negotiate directly with the lender and you feel confident doing that, that's probably always the best way. The nice thing about debt relief services is they take some of that difficulty of having to do it yourself off of you. Just make sure you're vetting debt relief services. There are some out there that are phenomenal, and there are some out there that aren't. So read the reviews, ask questions of people, make sure that when you have a conversation, if you decide to have a conversation with them, that you are asking for past reviews, you're asking for what their success rate is, et cetera, and you know all of the fees that are associated, because that can also be a big one. So Miller Slaughter, I'm referring to your question. I think debt relief services have their place. I just strongly suggest that you have those conversations and that you are very diligent about understanding what their services are going to be. And if you're comfortable negotiating yourself, go for it. It just takes the middleman out. I think that was all the questions. Oh, can I give an idea of a really good debt relief service? I can't say off the top of my head. I don't want to give that information because I'm just not confident enough to tell you one that I feel really good about. I would just do a search for the top ones and maybe pick three that you want to vet and do a lot of review research on. All right. If we don't have any other questions, we'll go ahead and end it. Thank you again for coming. Good luck. Stay consistent. Remember, baby steps are great. That's what you want to do. Um, and reach out to Community Ventures if you need anything. Thanks so much, everyone. Take care.